else we need to just plan that we're never going back.
And I think some of the things that they may share at the meeting is the other, they did a bunch of interviews with, different folks from operators all the way up to executive staff. And, there are probably some items that are out of the zero fares that probably need to address, may even result in additional costs, obviously. There were some of the operators expressing concerns about the interaction, the negative interactions with passengers.
Sure.
Going up, as you see at the briefings, the board meeting, physical safety of the passengers, between the passengers, and so forth. So there were, voicing concerns there. So there might be some action items or recommendations along those lines as well, which may have, possibly a higher increased cost aspect associated.
Yeah, I'll make it really clear to you guys. Lincoln and Andres are here from Richmond. Henrico, I can speak for. We had this conversation. We could be very supportive of zero. We would. I think Andres' points are correct. We would be supportive of zero fares, but not at the detriment of shelters and benches and operational stuff. Like we're going to have to pay for it. Like I'm positive we would be thrilled to support it wholeheartedly and raise the flag on it, because I think Andres is right. That is a proud bang your chest moment, and it funnels our formula for revenue.
But we
But
can't have
it's got to
somebody.
pay for it. Got to pay for it. I don't want it coming out of other detriment, other things.
We can't have somebody that's got one leg missing that's standing on the side of the road that has to hop up a foot to get to onto the bus.
And I think we can do it.
That's not.
I think we can fund. I think we can fund. Go ahead, Lincoln.
Yeah, I'd just jump in and say, I think, I think we covered this a little bit earlier, but it's when we looked at collection, $1 million, and then you have to spend 4 to 5 to collect that. And the delta we're solving for, I think, is, and obviously both numbers probably go up as far as the cost of fare enforcement as well as the collections in an expanded system. But, I would just say I'm optimistic about our ability to solve for that with a combination of the enhanced rider, the enhanced revenues we get from TISDAC, from having more riders, et cetera. And as we whittle away at that delta, it's something we really can solve for. I think it's going to take some more planning. I think the comments about both rider and driver safety, et cetera, have to be accounted for. But when we started this conversation 3 or 4 years ago, it was before the pandemic. It was kind of shocking to see, how much we have to spend to collect, this, and spending 5 to collect 8 is not a great ROI. And if, the balance of not doing that is we have more riders, that creates more state revenue. It really feels like a win-win.
I agree. Mm-hmm.
Just one more reminder, if I may, the TISDAC formula could possibly change as well. So that's something else that we will be looking at. Sam said we look at it every 3 years.
3 years, yeah. So right now, our ridership's growing. Other folks have not seen that growth, but that could possibly change in 3 years.
Well, we could fill the drivers shortage. We could actually grow more.
Correct.
Because people.
With the introduction of the North-South BRT and so forth like that, and increasing the frequency of service.
Good to go.
All right. Anybody else have any other questions on that?
I think the only thing would be to follow up on the point of the ECU conversation, like what do they need, and more details on how we can help, because while it is a GRTC conversation, it is a partnership from our support, and we are a new representation. I think it'd be a different conversation from us as a region talking to VCU rather than just GRTC going if they ask.
Do you have anybody on their board? We have one. Mr. Nelson sits on the VCU Board of Visitors. Who from City Council does, Lincoln? Do you know, or somebody must down there?
We don't, I believe Mr. Nelson's appointment is, was by the governor for his community. We don't have a city representative on the VCU board.
Me too.
All right, thank you.
We do have a lot of collaborators. I mean, I know Andy Florence from CoStar is on their board, and I could probably go through the list and point out other, but we work very closely with President Rao and his CFO and pretty regularly. So we can certainly engage in those combos.
All right, thank you.
All right, RideFinders FY 2022 financial audit.
So I kind of like to just flip out what I call just a we do GRTC first? So I wanted to bring this as an agenda item because right
Did
now.
they have those loaded up?
When I check, as soon as I get it off with you.
Okay.
So
GRTC.
currently, I mean, as it exists, the GRTC board is the hiring authority of the external auditors because the finance committee did not exist. In traditional, and where I have come from in government entities and so forth, usually it was the board of finance was the hiring entity of the auditor. So the auditor in charge or the principal or partner would come and we'd usually go through a presentation to the board of finance as to, here's the financial statements, this means, here's all our other compliance reports, what they mean, and pick out the highlights. So this year, since all members of the board were given the audit, the pre-audit questionnaires, so it only seems right to have that at this upcoming November meeting. But if we're going to have a finance committee functioning, maybe is your guys' discretion. If you want the finance committee to be the hiring authority for the auditors, that's discussion there. But I felt that before the November meeting, I could walk you guys through the different financial reports a little bit more in depth than what Leslie is going to walk through at the board meeting. So the first one, going through GRTC, obviously, I'm assuming that you guys are off, but this is the opinion page. So thank you, Joe, you read my mind. That's first where I was going to. The second page, the second paragraph there, right there. In our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of GRTC, its blended component unit as of the end of June 30, 2022, and with respect to changes in financial position and cash flows in accordance with the accounting principles. So basically, it's an unmodified opinion. So the first paragraph under the responsibilities of management and financial statements, basically the clear is the financial statements are the responsibility of management. We're responsible for preparing them and in the fair presentation, for the design, as well as we're responsible for the maintenance of the internal control system and to make sure that they're fair in presentation. It's not the auditors prepare them, we prepare them. So if you go down one more page, we're in the first paragraph here under the auditor's responsibility. Their objectives are to obtain reasonable assurance. They're not saying that every number is 100% accurate. They do the review and they offer reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error. So reasonable assurance is a high level assurance that is not an absolute assurance and therefore is not a guarantee that an audit conducted in accordance with generally accepted accounting standards and the governing auditing standards will always detect a material misstatement when it exists. But they're using the professional standards that are established during the course of the audit. And based upon that, they're confident in they're issuing an unmodified opinion. So that covers the opinion section. So bounce forward to page 4. The next, I think the page is one, it's not really that. Go down. So that's 6. Go to 6. Yeah. So this here is with the MD&A. This is not an audited section of the audit, the financial statement. This is where management basically discusses what's transpired in the year. So of the highlights, you go down one page, Joe. So here is kind of the summary statement. So looking right here, 2021 is the audited numbers on the right and 2022 are the current. So just on the major changes. So right on the top line, the government purchase services, you'll see 2021 was 5.3 million. It's down to $200,000. That is, as we talked at the other previous finance committee meeting, that is the reclassification, the recharacterization of the Henrico and Chesterfield contributions. They were previously for purchase services. So purchase services show up there. Now they're down in the operating contributions line where you'll see down about 3/4 of the way down the page. They're within the 62,107. So that's one of the reflection. Also, on the special service revenue, you'll see 2014, 1.4 million versus 842. Just as a refresher, during the COVID in 2021, we basically cut the VCU in half due to not having the riders. So that's why that increase is there. Going on the expense, pretty much everything's in line except for the employee benefits and payroll taxes. You'll see almost a $10 million reduction. That is due to pension expenses. We had briefed, we shared the actual evaluation of the GASB 6768 at the previous finance committee meeting. I think it was August. Due to the change of the actual assumptions, due to the heightened both employee and employer contributions and the collective bargaining unit thing, our funding level was able to take a higher discount rate. The liability went down. So when you reduce the liability down, expenses are reduced. So that's the explanation of why the operating expenses went down. It's driven primarily due to the change in the actual assumptions. So then coming back down in the operating contribution line, you'll see the 62 million versus the 50 million prior. That is in part, there's a significant reduction in 2021 to 22 with COVID relief funds. 2021 had about $25 million of COVID relief funds utilized, as is in 22 is about 6-7 million. But what was replacing is you have the CBTA that's flowing through that line, as well as you have the heightened about $6 million of incremental TISDAC that goes through there, as well as the Henrico and Chesterfield contributions, which were around $5 million. So that kind of walks you through the significant changes. The capital grant contribution line for 2022 is 18.3 million versus 1.56. That's being driven by the purchase of the rolling stock and some infrastructure investments that we made. So kind of just, that's kind of the highlight of what the MD&A is writing in the next page, as you'll see on page 6. It provides the narrative that I kind of got you. You can see operating revenue in the 4th paragraph down. It discusses the moving of Henrico and Chesterfield down. The decrease is not in the next paragraph. Decrease in operating expenses talks about the change in the Old Dominion Transit and Police Discipline Retirement Plan assumptions. So this in the MD&A, if you don't have a chance to read through the whole report, reading the MD&A kind of gives you the summary of what happened during the year. The next section, Joe, if you can bounce down probably about 5 pages.
Is this it?
You break that? Man, we are in sync today. So this next section started on page 9. This is the actual financial statements on here of the GRTC. So this shows the detail of the balance sheet. As you can see from, let's go up a little bit, you can see the asset balances have increased about $20 million. Top line, cash and cash equivalents are up about $18 million, which is a good thing. You also see receivables are up about $3 million. The receivables are up at the time because we were buying the buses. We didn't have to, it's basically the grants receivable from the FTA that were driving that. And you also see that offsetting it down, right above the total line is the deferred outflows, the pension deferrals. That's driven as by the reduction of liability. It impacts deferred outflow of resources as well. You can also see capital assets. We had about $8 million in investments for a year. So balance sheet from the asset side is pretty healthy. Good, a quarter of it is in cash and cash equivalents. One slide down, the liability section. You can see that accounts payable is up a little bit compared to prior year. That is because we received the buses in June, so they were all in payables at that point at year end, just the timing. And you can see the long-term liabilities in the middle of the page. The pension liability went from 80 million down to 37 million. That's due to the change in the actual assumptions. So that's the flip side of that transaction. Now we'll go one more. Well, I have one more after that. Sorry. So this is a more detailed of the P&L that was in than was in the MD&A, and you can see the government receipts changes. I'm sorry, that's the cash flow.
Back one page.
Yeah, one page. Sorry. One up more. Okay, so here's the operating revenue. You can see the different components, and we see down here in the operating countries, is what I was alluding to. So the FTA, the top line, the 3.5 versus the 3.8, that's kind of the flexing of PM and ADA. You can see the CARES Act was almost $26 million. That was being utilized in the transition from the old structure to the CBTA, as the operating contributions for Richmond and Henrico and Chesterfield were halved. We did have utilization of around $6-7 million worth of COVID relief funds. You can see now here that the Henrico and Chesterfield are now in the operating contributions, and you see the TISDAC, which is the Virginia Department of Rails and Transportation, went from 12 million up to 18.3 million. And you'll see CBTA entering in here at 19.4 million. So this is consolidated GRTC. So this is both GRTC as well as RideFinders. So you see the CMAQ of 663. That is basically the RideFinders funding they're getting from the state to fund their operations. So go about two more slides.
Is it this one?
Yeah.
Yes,
sir. So
have the parts that we're waiting on for buses started coming in, and where is that money at that's to pay for those parts when they roll in.
So they would be in the operating expenses, so in
I
the
just didn't, I
materials
don't
and
recall
supplies.
seeing a line item with that, so I'm just trying to figure out where.
Yeah, there's you go
If
back.
it's, my biggest question is are the parts actually coming in now and we're able to get the buses back on the road, or are we still holding money for the parts?
The parts are now coming in. Happy to announce that only we're like 10% of our fleet is down now, and that's amazing.
Well, that's fantastic.
Coming in, we were able to get the catalytic converters in for the van, so we are.
So this is as of the end of June, just 12 months ending June 2022. So the fourth line item down, materials and supplies, the 7,012,000, that's where the parts would be in there. Obviously, it's about 10% increase year over year, and it will probably be, it's probably trending at a little higher rate now because of inflations that will be even higher, as well as supply and demand. You can also see the utility line is about 10% up year on year as well. And fuels go through that line as well.
Thank you. I just want to make sure the parts are actually flowing, because I know we were holding money for it, but
They're looking at
having the money's good, but we need the parts to keep the buses going.
So this on here, the takeaway about right above the cash and cash equivalents beginning year and end of year is that in each of the years we're generating cash, which is good. So as our operations and our funding, it's not we're consuming cash and eroding our position, we're growing cash, we're developing cash and cash equivalents. So that's a positive sign of health as well. So then after the financial statements, you start here's your notes to your financial statement. This basically is also a instrumental part, but it will provide additional narratives with regards to the material line items. Significant items such as what the capital assets or useful lives that we're using to determine depreciation. There's one that outlines our cash and cash equivalents, talks about our pension. So go down to footnote 6. One more page. Yeah, so right here it starts on the retirement plan. It basically talks about how the benefits are calculated, and go down a little bit, and I can show you the impact of 2 more pages. Okay. So right here, stop on that chart. You'll see here, this is the funding policy over the years. So the union contract as of October 1st of 2020 was established 10.5 for the employee and 14. So October 1 of 2022, it's now 12 and 15%. So by changing from the 8 to the 10.5, the 8 to the 9 to the 10.5, and increasing the non-bargain, which happened before you all came on the board, to make them sync up. This is what drove the change in the actual evaluation assumptions. So Joe, go one more. So you can see here the discount rate there is 6.5%. You can see down on the third line, the bond by our general obligation 20-year municipal bond index. When you're in a depletion state, you have to use kind of a lower discount rate. So lower the discount rate, the higher the liability. Since we were able to show that and demonstrated that when we have the higher contributions, we don't have a depletion date that is within the scope of requiring under the GASB guidance to use a lower discount rate. So that pretty much, you can see right in that top table under the total liability, the effects of assumption changes on inputs was $41 million. That's a significant number, and that's what drove the reduction in the pension expense that went through the P&L. And then, going down, the next section is supplemental. Yeah, right there. So you're good. So right starting here is part of this. This is not audited, but this basically is supplemental information. This basically gives you a 10-year snapshot, or not a 10-year, 76. Yeah, let's put it 2 years. It shows a snapshot of the different pension liability. And this was out of the GASB 67, 68 report that we went through. And the items that I take away from there, look on the very top line, the service cost. The service cost is a definition, is what it costs you for 1 year to provide the benefits to the covered population. And then looking down the plan fiduciary net position, the contributions from the employer and the employee. So that's about break even with the service cost. So you don't really ever get to 100% funded when your service cost is basically equaling your contribution level. And in addition, we have You can see we have benefit payments going out the door, about $5.8 million. We do have investment income. It was a decent year, $4.7 million came in, and we have admin expenses, which was $300,000. And part of this is, a good chunk of that is the fiduciary plan policy. It's around over $100,000 because of the way the pension plan is down at the funding level, the premium is higher. So it's something we're going to look at, and this in the admin, this is your pension investment advisors, your auditors, as well as your TPA for processing the pension checks to all the retirees. There may be, the reason for the growth in the expense is due to the cost. A good portion is the increase in the fiduciary policy, but we're going to take a look at that at the pension committee. The four of us will take a look at that. Going back down to right there, perfect. So in the back of the report here, this is the independent auditor's report on internal control. So right under the bold internal control over financial reporting, in planning and performing the audits, they consider the company, Brown Edwards considers our own internal control structure over financial reporting. And then the second paragraph kind of defines what a deficiency is, what a material weakness is, and a significant deficiency. So just roll up a little bit. So the last sentence there, given these limitations on our audit, we didn't identify any deficiencies in the internal control that we would consider material weaknesses. However, material weaknesses may exist that have been not identified. So the takeaway from here is they didn't find anything that was alarming to them. They have a sense that our internal control system is adequate for our operations. And the next report here and here is, this is the uniform guidance. This is your Title II U.S. Code of Federal Regulations, Part 200. So basically, in their opinion, right in the second paragraph, with regards to all federal awards, this is the opinion. That we, the company, GRTC, complied in all material respects with all types of compliance requirements referred to above, and could have a direct material impact. And it defines, the second, underneath the basis, what their basis for making that opinion is. So go down like 2 or 3 more slides. This here shows all our federal awards. The formula grants, that's our 5307. So we had about a little over $8 million in 5307, and the 5339 is the bus and facilities formula program. So a total of $16 million. And then the last section of that last report, the last page, Joe. So this here basically summarizes the findings. So the auditor's report has expressed an unmodified opinion. That's the audit financial statement opinion. There are no significant deficiencies relating to the audit of the financial statements. There are no instances of non-compliance with regards to federal awards, no significant deficiencies. And, so basically this is a clean audit, and it shows the threshold, for A and B for the determination is that we had federal awards in excess of $750,000. So that's kind of, Leslie's going to walk through. She has a report to the board of directors, which she has a more formal presentation, which she'll talk to you about. But I just kind of wanted to walk you through our audit of financial statements, just call out some of the significant items that to your attention. RideFinders, it's a simpler audit. It follows the same structure, but does not have an MD&A because it's a 503C entity. But their opinion, once again, as a GRTC, second paragraph, it's an unmodified opinion. The responsibility shows how they prepared it. And, they're in there, they have an asset balance, they have a balance sheet, they have a statement of cash flows and footnotes. It's a much smaller scope. Obviously, most of the processes and assets are held in GRTC. And these are incorporated into the GRTC's financial statements. So there's nothing negative or out of the sorts in there. Also in their independent, in their internal control, saying there's no findings of any weaknesses, because they utilize our internal control system, as well as they have their own subset for certain particular transactions. So all in all, everything's in good shape. And Joe, the other document is going to cover is there's a third. This is regards to the GRTC financial statements. In addition to the financial audit, we have agreed upon procedures, which they refer to as the AUP. So this is regards to after we take our financial audit, we then have to report through the NTD on a series of NTD reports. So after the auditors have signed off on the financial audits, we provide the various, as you can see here, the applicable forms, different forms, like the F10. These are kind of mimicking how my presentation to you on the board, those type of forms. So what they do is they review how we prepare those, how we take our trial balance and funnel them through. They look at our allocations because you have to allocate things between bus routes, fixed route, rapid transit, and van pool. So as you can see for the different forms, there's no exceptions were noted on any of the forms. Just slide up a little bit. One item that they'll probably talk about is on item 11. Traditionally, we do a form called FFA 10, which is a federal funding allocation statistics. Because the NTD is actually updating their database, we did not have to submit it at this point. So they're just calling out that they did not do that. Other than that, in that paragraph right where Joe's marker is, they're engaged by the company. This is not an audit. This is agreed upon procedures. They say in the second sentence, we're engaged. We were not engaged to and did not conduct an examination or review of the engagement of the objective, which is just expressed opinion. Basically, they look at the allocations and how we took the financial audited information and flew it into the schedule. That's the sign off that they're providing here. And stated October 31st. So everything with the NTD was filed on time on October 31st. You're all signed off on it. So all our reporting obligations with regards to the FTA have been met for fiscal year.
Is that FFA 10 available now?
No, it will probably be in January.
So we still have that form that we have to file, but everything else is done.
Everything else is done.
Any question? You good, Lincoln?
I'm great.
All right. Any other business?
Yeah, if I may. We had a brief discussion in the board meeting about upcoming negotiations with the union and pay and hiring. I think was the thing. And I think just in full disclosure to this group, I chatted with John after, and I think it should be tasked to our committee somehow to continue to look at how we become a better recruiter with regard to our rate structure. I know that there's negotiations that are going to be ongoing with the union. So, but I think if John, if you know where I'm going, if you can elaborate, like there's work being done now. I think you guys already have a study. Every dollar our pay rate changes, you can tell us what millions that is on the bottom line.
Right.
And I would just ask for this committee, if possible, if we can continue to review how pay rates impact the financial position of this organization and what this organization is capable of, and how we can become a world-class payer so that we can reach world-class status in our service. And I think that this group should be tasked with that. This is where it should start. What can we, how do we afford it? What can we plan for it down the road? And then how does it enter in our negotiations with the union? Did I say that correctly? Lincoln, I know we had a brief discussion about it, but.
I would ask this, do we have the ability, if we want to talk about salaries and personnel, to do that in a closed committee meeting session?
I think we do. And that, I don't want to say that's a standing agenda item for us, but Mr. Chairman, I would offer that is a financial discussion that this group can spearhead and should be having in future finance meetings where we do go into closed meeting and talk specifically about how to become a world-class recruiter.
So looking at our timeline historically, at the January board meeting, we usually put out a preliminary budget to the board. So between now and then, we have the opportunity in our December finance meeting as well as January meeting. We could sit there, and we do have some analysis done with Cheryl and I, obviously it didn't, because the union contract expires as of September 30th of 2023, we're gonna have to start union negotiations. So if I would recommend that at our December board meeting, maybe we have an agenda item that we could mark as a potential executive session in advance of, I'm assuming that you have to on your notice, your meeting, you have to
I think we need to do that, and we'll need to have a statement to read.
I'll get mine to have it for you guys.
Yeah,
I would encourage that, and I would say it's fruitful discussion to have sooner rather than later, especially so we can start to plan. We're gonna go in negotiations with them in early 23,
Yes.
and they have an opportunity, this has an opportunity to be a very successful discussion because we want the same thing. We want to show our operators how much they mean to the growth of this organization. If we want to get to these service levels, we're gonna need operators. And how do we get there together? And that's a key point for our negotiation next year.
So we can plan, I know we're talking about the funding allocation in December. We can add this to the December as well as keep it as a placeholder for January, so we can have 2 steps up to prior.
Is there a way to get the information on what kind of ridership increase we think could come in and what kind of funding could be related to that may offset some of the cost,
So I think
the increases of salaries or pay rates?
Yeah, I think the TISDAC funding is kind of at its ceiling, so that would be remaining. So I think what we can look at is what,
Will that stay there if we move into the next level? Will we be able to figure that out?
It's capped.
it's capped. We're at a
30%.
cap right
I
now.
thought we were getting ready to move into a new,
No, that would be for the.
oh, that'd be in the
That's
that'd be at the
FTA.
3-year review, not now.
Correct.
Okay, all right.
So we could look at it from, you can work with the planning folks and see how many, almost do like a bill, explode a bill of material. If we add X amount of miles, how many more operators and how many so forth like that, we can quantify what it would be, what the impact would be on mileage, service hours and service miles.
Is there something on that, or are you thinking?
I was gonna go back to the workforce aspect and traction piece, and one of the comments we had during our tour was working with our workforce development partners, J.J. Reynolds and others, to see, we need to create a bench because we're gonna every year need to have more operators and we continue this path of expansion of routes, et cetera. It's not just now, it's gonna be how we continue this for the future. And my concern would be something that Lincoln and I have discussed previously is you're gonna cannibalize some function. Our bus drivers for our school system, if we start paying better, then they're gonna wanna come over here and then we're now short over there. And so we've got to think about the need for, I think, the entire region on exactly what we're talking about, because it is detrimental to our success if we have a bench of people currently learning the skills needed to deliver in this job sooner than later, rather than it being just depending on what GRTC can bring in the door. Pay can be away, benefits are away, benefit pension, all these really good traction pieces are great, but we have to look at the entire piece too, because then we're going to go back.
Well, as we look at sponsorships with corporate sponsorships, that may be part of the conversation too, is you're gonna, as we have more need for transportation, we're gonna need to pay drivers a little bit more. And I know that's probably not something they're gonna think they wanna do, but if they really want to have the workforce use transit, then they may want to be in the partnership so that we can have enough drivers to make sure we can meet the needs that they have. Maybe a selling point, even though it might sound initially as a.
Or the data we need is jurisdictional pay. Where are we all on school buses? Where are we all here? School drivers here. Where are we? Where are other regional entities like GRTC and Hampton Roads and Charlottesville? What are they paying? And that kind of, and then per dollar increase, what does it affect our bottom line budget and how do we cover that? Those are the types of data points.
Though may have a little bit different.
Oh, they're different.
Because you're gonna
They're
have people
different,
that want to be able to have their kids.
They're different. They will cannibalize a little bit, but they're different. Scheduling matters, but those data points are necessary for us to make good judgment calls on. And then, but we need that before the negotiation with the union, because then we know where we're going.
It's not just wage, it's also benefits. And one of the things that we talked about previously is that the DB plan, a 12% contribution when you're coming in at entry level, and the discussion, compression of levels, starting point 65% or 75 or 85. A lot of this comes in, and we did implement the consumer-driven wellness plan, and the employee only coverage in there, in addition to being funded the HSA, there is no employee contribution. So it's kind of a selling point to get that to help show the value to the operator when they come in. So I think that there's multiple levers we can look at, and we have some opportunity to be creative in our approach.
I just appreciate the discussion starting here and adding on the agenda, because in the last couple of years, I work in the staffing industry, 2,200 employees. And it's in the hospitality industry, and these are low wage earners. And one thing we learned is that an HR recruitment strategy doesn't begin, that discussion does not begin in HR. It doesn't. They can discuss it all they want, but they can go nowhere without someone from the business department, someone from finance, allowing them the fuel to have the discussion. So I'd like to provide that fuel for them.
Any other new business? Do we need a motion to adjourn?
I'll give it to you. Lincoln, unless you got anything, Lincoln, I move to adjourn. He's going. Well, he has already moved to adjourn.
Yeah.
I think Lincoln seconded that. I think we had a second from Lincoln.
Second, I'll do it.
All in favor?
Thanks, John. Thanks, Joe.
No problem.
There's a press event right now.
Oh, is that right?
Yeah, we're trying to match you all.
Press event?
Yeah,
We didn't do a
trying to-
press event today.
We did.
Hmm.
We're doing a refund, tax refund.
Oh, I saw that comment. Yeah, that's good. Good. Sorry about that.
We did 5 cents.
That's awesome.
Yeah.
That's really good, actually. Real estate? Vehicle.
It's a refund rebate, yes.
Yeah, real estate.
We have a surplus that we have to sell.
Sending checks or